Investment strategies are essential tools for investors looking to grow their wealth and achieve their financial goals. Understanding the different types of investment strategies can help you choose the approach that best suits your risk tolerance, time horizon, and investment objectives. Today, we'll explore 3 popular investment strategies: value investing, growth investing, and day trading. Value investing is a strategy that focuses on identifying undervalued stocks or assets. Investors who employ this strategy believe that the market often misprices certain securities, providing an opportunity to purchase them at a lower cost than their intrinsic value. Value investors typically look for companies with strong fundamentals, such as low price-to-earnings ratios, high dividend yields, and a solid balance sheet. By purchasing these undervalued stocks, value investors aim to benefit from their eventual appreciation as the market recognizes their true worth. Growth investing, on the other hand, targets companies expected to grow at an above-average rate compared to their industry or the overall market. Growth investors focus on companies with potential for significant revenue and earnings growth, often ignoring current price-to-earnings ratios in favor of future potential. This strategy can be particularly appealing in sectors like technology, where rapid innovation often leads to substantial growth. However, growth investing carries risks, as companies may fail to meet lofty expectations, resulting in stock price declines. Day trading is a more active trading strategy that involves buying and selling stocks within the same trading day. Day traders capitalize on short-term price fluctuations, aiming to make quick profits on small price movements. This strategy requires a keen understanding of market trends, technical analysis, and a willingness to respond swiftly to changing market conditions. While day trading can offer the potential for high returns, it is also accompanied by significant risk, and many day traders experience losses in their pursuit of quick gains. Each of these strategies presents unique opportunities and challenges. Value investing may be appealing for those with a long-term perspective and a desire to build wealth gradually, while growth investing can be exciting for investors looking for rapid capital appreciation. Day trading is best suited for those who are willing to dedicate time and effort to the markets and can handle the associated risks. Ultimately, the choice of investment strategy should align with your financial goals, risk tolerance, and investment style. In conclusion, understanding the differences between value investing, growth investing, and day trading is crucial for anyone looking to navigate the world of investing successfully. By evaluating your objectives and risk tolerance, you can select a strategy that fits your needs and helps you achieve your financial goals. Remember, the key to successful investing lies not just in choosing the right strategy, but also in continuous learning and adapting to changing market conditions.